You are watching WCCO II, a service of CCO Cable.
Hi, I'm Christy Cardenas. It's Monday night, which means it's time for The Intelligent Investor, brought to you by Webb Arnold Markman. Bob Markman's not here this evening, but Josh Arnold and Jerry Webb are. They are here to answer your questions about the stock market, commodity market, futures, financial planning, insurance, any other general investment questions you may have. We are live. You can call us at 333-7727. Before we get started, there is one piece of business that I want to take care of tonight, as we do every night. That has to do with the Star Tribune newspaper of the Twin Cities. If you write to Star Tribune newspaper of the Twin Cities, care of Primetime Live, 1004 Market Avenue, Minneapolis, Minnesota, 55403, you become eligible for a drawing we have every Saturday evening. Now, why do we have a drawing, you ask? We have a drawing because the Star Tribune does not feel that any of the programming on WCCO Cable 2 is diverse or innovative enough to be listed in their weekly program guide. So if you write us a little note telling them that you wish to see us along with the other programming listed in their weekly program guides, we will draw dinner for two every Saturday evening for the Mariner Restaurant in Mendota Heights. It's a real nice restaurant, a $40 value. I think you'll enjoy it, so write in. Right now it is time for Webb Arnold Markman's Intelligent Investor, brought to you live on Primetime Live here on cable, WCCO II. Stay tuned.
Who are those two guys?
Who are those two guys? Good evening. My name is Josh Arnold, and with me tonight is Jerry Webb, my partner and cohort at Webb Arnold Markman, your personal investment advisor. And we're tuned again to another edition of the Intelligent Investor right here on CCO II. You should give us a call if you have some questions on investing and how you can pick a mutual fund, on how you can look for the best in tax-deferred annuities, on how you can evaluate limited partnerships and the risks that you might be taking. And tonight we are going to talk about the risks of investing and what you should look for and how you can evaluate your measure of risk, as well as demystifying what it costs to invest in one of the 3,500-odd mutual funds that exist today. So give us a call tonight at 333-7727, and we will be happy to answer your questions right here on The Intelligent Investor. But before we do, we'll just bring you up to date on a few things. Are we having a bear market? I don't think so. Do you think we're having a bear market, Jerry?
I say bull.
So now we have a bull market
And a bear.
and a bear market. No, we think we're going through a little correction, maybe.
Slight.
And it is a very slight correction, but the numbers start to boggle one's mind because the numbers at this point are so high. Where do you think the stock market's going to go?
Well, the market right now today, I guess it moved about 50 points in both directions. So, again, it's having a lot of volatility, but long term, I don't try to look at the newspaper every day and get scared to death by everything that's happening in the United States, and you can't look at investments on a day-to-day basis. So, long term, again, I think the Dow Jones is going to go to 3,000 and 4,000 over the next 4 and 5 years.
Okay.
Possibly higher.
Possibly higher. I know that we've talked about where the Dow Jones is going to go before, and I know that some of the articles that we've read, particularly in the financial world, I read an article several weeks ago called the Dow at 3,000, and in that article, the technical analyst for Advest, which is a leading brokerage firm on the East Coast, said that if we were to adjust the Dow Jones for inflation, in order for it to be equal to its high point in 1966, the Dow, which was 1,000 in 1966, would have to be at 3,544 today just to be at the same even point. Before we go to the phones, I'd like to remind you all of our upcoming seminar. Tomorrow evening we'll be having one at 7:30. It's a seminar geared for people ages 40 to age 60. It's for those people looking for growth. We'll talk about the pros and cons of mutual fund investing. Where should you put your dollars now? Should you consider cable television? Should you consider real estate? What kind of risk level should you be looking at? If you're planning on retirement, if you're looking for longer-term growth, if you might need income at some time in the future and are concerned very definitely with safety, this is a seminar for you. And you'll want to call our offices at 925-9261. If you're not on our mailing list, you should be to get the Intelligent Investor newsletter. You want it right here? There we go. There we go. Intelligent Investor newsletter. You guys are great with the cameras.
Can I see it, Josh?
You want to see it too? Here it is. The Intelligent Investor newsletter, chock full of tremendous information that we get from money managers, where we believe the stock market and the bond market is going, what you should be considering right now, and even into the near-term future. And you can get that by calling our offices at 925-9261. And right back here, we have Tom from Minnetonka. Tom? Tom? We don't have Tom here. Tom must have disappeared in the meantime. We'll get Tom back. When we started the show, we talked about how you can evaluate risk. And one of the things that I've done to evaluate risk, maybe you guys can see if we can get Tom back. We get this little board? Oh no, where's it? This here, right here? There we go. Down, whoa. I'm going to have to write on this board here. We've talked about looking at levels of risk. And one of the easy things that I've done is put a line here. Let me see my little line. I don't know. And looking at a scale from 1 to 10, and we took 1 in terms of level of risk of having money in a bank, or a tax-deferred annuity where everything is guaranteed, both principal and interest. Up here, 10 would be going to Las Vegas or investing in commodities.
Is it more fun in Vegas?
It's a heck of a lot more fun.
Okay.
Investing in Vegas.
Go ahead, Josh.
But you also have a greater chance of losing money.
I see.
And 5 on our risk scale would be investing in IBM stock. So you have a blue chip kind of stock, and that would be an average amount of risk. And every place along here is going to be places where you as an investor can invest and get good rates of return. But I have found, and I'm sure, Jerry, you'll agree with me, that if we can invest at the average level or less, that we can get consistently superior returns on a long-term basis in such a way that we can double our money every 4, 5, or 6 years.
So you're talking what kind of rate of return, Josh?
I talk at that point of returns between 13 and 16% a year, and then again, not every year, but on a consistent basis.
Is that good compared to the bank, what the banks are offering now?
Well, if the banks today are offering between 5 and 7%,
13, 14 is pretty good.
and 13, 14% can be very good, depending on the amount of risk that you might want to take.
And there are places out there you think that they can get that, our listeners can get that kind of return?
Our watchers and viewers, I think very definitely, our watchers and viewers can get that kind of return on a long-term basis.
Who was that girl?
Who was that masked rider?
Okay.
They can get that
I wonder
return
if
by
Tom's
looking at,
on. What's that, Josh?
they can get that kind of return by looking at some of the diversified mutual funds that we'll talk about in a few minutes.
I wonder who's on the line.
We'll see if we can get Tom.
Great.
Tom,
Yes,
thank you very much for being patient with us.
that's all right.
How can we help you, Tom?
I have kind of a twofold question.
Okay?
With the large bond losses by the Japanese companies in Japan with their yen bond losses that are apparently going to run into the tens of millions or billions of dollars. Will that be enough to keep the Japanese out of the treasury auction that's coming, therein driving the yields up and the bond futures down? And if that happens, when the trade deficit for October comes out and shows a substantial improvement, will the bonds come back to 86 or 88? The December bond futures.
Well,
Where did you get that question? That's a heck of a question.
Well, it's something I look at all the time, constantly, and I guess that's what I see is happening. I see that the Japanese people, there are reports of about 20 companies having substantial bond losses in Japan. And I'm afraid that that's going to Japanese out of our treasury auction coming, and that will drive up the yields on it. And
in other words, that you feel that if the foreigners are not buying into our bonds, that will depress the prices of bonds, will be available cheaper, and the yield on our bonds, the treasury bonds, will be much higher.
That's correct.
Well, we hold on to that thought, and we'll get back to you and give you an answer to that question, or at least our opinion on that question, after we take a short commercial message. Stay tuned right here on The Intelligent Investor, and get by your phones and call us at 333-7727, and we'll be happy to answer your question or give us your opinions. Tom, stay with us.
Announcing Solutions, a special seminar for your serious money.
It's got a lot of common sense advice.
We learned about some good ways to help make our money grow.
The Solutions Seminar, investment ideas for growth.
Found out how to get some higher yields.
You're never too old to learn a better way.
The Solutions Seminar, investment ideas for income.
Growth.
Income.
Serious money.
Attend Solutions, the seminar for your serious money. For reservations, call 925-9261.
KSTP AM 1500. We don't play music. We play music for the mind in the form of thoughts, opinions, comments, and statements. We talk to you, about you, for you. KSTP AM 1500. Listen to the beat of public comment on a variety of truly unusual subjects. Try us and you will tell your friends. KSTP AM 1500. News and talk radio. We've got the Twin Cities talking.
Join us Sunday, September 13th for 5 hours of free entertainment on 3 stages. There'll be rock, jazz, and big bands including Shangoya, the Wolverines, More by 4, Great Nation, Jules Herman, Shirley Witherspoon, and J.D. Steele. And over 100 free games and rides. Come to a Fair of the Heart, noon to 5, Sunday, September 13th at Minnehaha Park. A United Way event sponsored by Norwest Bank.
And we're back right here on The Intelligent Investor. I'm Josh Arnold, and with me is Jerry Webb, and we're from Webb Arnold Markman, your personal investment advisor. If you have a question, feel free to call us at 333-7727, and we'll be happy to answer your question or give you our opinion on what you can do with your money. And we're back with Tom. Tom?
Yes.
Thanks for waiting. We were talking about what we feel might happen if the Japanese or any foreigners stay out of the next Treasury auction.
Correct.
Okay, Jerry, I'll let you give your opinion first.
My opinion is very simple. Trying to outguess that is like trying to guess which way the stock market is going to go tomorrow morning. Maybe you know more about the market, the bond market, than we do, Tom. But I would just have to say that wait and see what happens, because the Japanese, whatever the Japanese do, is not going to affect the United States as a lot. I think as much as a lot of people think. We're still the strongest country in the world. And we can't go base our investments on what's happening in some other countries. So I would have to say it's not going to have a major effect, and not to try to worry about it from day to day. Josh?
Well, I disagree with you a little bit. I think that what goes on, whether it be in Japan, whether it be in Germany, or whether it be in England does have an effect on what goes on here. If I look at what goes on in Japan as an example, on a realistic basis, Tom, my feeling is the Japanese have over $8 billion a month surplus dollars that cannot be absorbed by their own investment markets, and they're continually looking to invest where they can maintain the highest yields. They are very active traders in our treasury markets, and I think they'll continue to be so, particularly when they can get, in terms of yield alone on treasuries, better than 3% here on U.S. treasuries than they can get on their own bonds. So I don't think that any problems that they're having there are going to take them out of our bond market. Does that help you?
Yeah, given that scenario, whether it adversely affects the bond futures now and in the immediate future, my proposition is that the October trade balance, the deficit, will show a substantial improvement when it comes out the middle of October.
That could well be, but I don't believe that the trade deficit that we have, given some of the, I'll say, the economic situation that exists in the world and the value of the dollar, is necessarily going to improve. But I do see the amount of money, the cash flow that exists in our country and in countries around the world that are strong economically, is tremendous, and that purchasing power, whether it goes into bonds or goes into stocks or into real estate, is going to eventually drive, at least in the case of the stock market and the real estate market, prices up. And it could, on a longer-term basis, bring yields on bonds down, but I think that's still a way out, particularly because at this point in time, the Federal Reserve, led by Alan Greenspan, want to keep interest rates higher to try to stabilize our dollar against other currencies.
You don't think the immediate future for bonds to come back up from their current, I think they called it 82.16 today, to come back up to the 86, 88 range is foreseeable in the next 3, 4, 5 months?
Well, that's a guess, but I really don't think that's going to happen.
Okay, thank you.
Okay, thank you for calling. Oh, now you can push it here. We'll try this way. Oops. There. Oh, we'll learn how to use the telephone one of these days. And if you have a question, give us a call at 333-7727, and Jerry or I will be happy to answer it.
Maybe there's some people out there that are getting lump sum distributions, Josh, from a company, pension, profit sharing plan. They don't know where to put it. Maybe some more investment questions on how people should get good returns.
Well, let me ask you, how can you get good returns? But before we do that, how you can get good returns. There was an article today in the Wall Street Journal, Jerry, on demystifying the prospectus, questions investors should ask about mutual funds.
And what are those?
That's what I'm going to ask you.
Oh, well, you were going to ask me. All right,
I was going to ask you. You seem like an intelligent individual.
Well, we'll see what I can do with it.
And I know one of the big questions that people ask is, what does it cost to invest? You know, should I invest in a load mutual fund, which might have an upfront sales charge anywhere from 1% up to 8.5%? Should I invest in a no-load mutual fund where there is no upfront sales charge? Should I invest in a fund that has a 12B1 charge where the management can take a percentage of the assets out to help pay the distribution costs?
What you're saying, Josh, is no matter which way you do it, you're going to pay a cost.
There is a cost involved.
There's no free lunch.
I've never found one.
Right? Maybe at the White Castle once in a while. But no, I think that there's all kinds of ways to buy investments, and there are no loads and all kinds of ways to reduce your costs. But I'd mainly be looking for the best possible return with the least amount of risk, and base it on a long track record and a good management company. So if I have to pay it to get into a particular fund that might have a 6 to 8% sales charge, I'll be willing to pay that if my investment goal is out there 5, 10, 15 years, and I'll recoup that over that period real easy if I have good management. By the same token, there are funds that have good management that charge lower sales charges. So you really have to take a look at your whole financial picture, what you want to accomplish, the degree of risk you want to take, and then seek out the funds that have the best that your objective in mind.
I mean, I really can't just pick up a magazine that makes a recommendation on a mutual fund or makes a recommendation on a stock and just pick that and go with that. I have to do a little more in-depth study.
Well, you said there are 3,500 mutual funds out there. I thought it was 2,000. Maybe we just gained another 1,500. But if we have 3,500 funds out there, you tell me which is the best fund. And just to read it out of a magazine and try to pick out the best one and then hope you'll know when to take it out and move it to another fund and make changes, I think everybody should be working with someone who works with that type of investment on an 8-hour-a-day basis and find some professional help.
So let me ask you a question. What do you look at when you're picking mutual funds that you can suggest for clients?
What do I look for?
Yeah, what do you
Again,
look for?
as I said, I look for a track record going back at least 10 to 20 years, showing where they had a return of 12 to 15% or more, that has low volatility, that is well diversified, and that's mainly it.
Well, that's some pretty good things. You mentioned management. How important is investing with a fund manager?
Well, I'd want to find out how long that fund manager has been there, or if he is a good fund manager, maybe coming from another fund, that he's had a long track record and a good record at that particular fund.
So those are a few more things that you should consider as to who the management is, what the history of the fund has been, how that fund meets your objectives.
Right.
First, look at those before you look at the actual cost to invest.
Yeah, the cost is immaterial if you can get good performance.
It's sort of like going to the grocery store and looking at the different varieties of food, as an example.
You may want to get some high-quality ice cream. Well, you're going to have to pay the price. And if you want high-quality management, I think you're going to have to pay the price, or you will pay the price maybe by picking the wrong fund with no sales charge or a low sales charge, and either wind up losing money or be very unhappy with the performance.
Well, let me ask you something. Now, if it is a question in terms of performance, if all things being equal, that performance is equal across the board, would it not be better to go with something that doesn't charge anything up front?
If the performance was equal, I would say that would be a good idea. But when you buy mutual funds, you may go out and pick out a mutual fund, but if you really want to have complete financial planning, to take a look at all your assets, see what you're doing with the rest of your life, with your insurance, with your wills, and you want professional advice, then the person advising you has got to make a living somehow, whether it be on commission or a fee basis. And so you're going to more than recoup any commissions you might pay by the advice that you're going to get over the years. So it all depends on what a person wants, really, is what it comes down to.
So you're saying that part of the fee that somebody might pay to invest...
Think gift. Think gift all year long.
You see, week after week, the New Yorker publishes the best fact, fiction, humor, criticism, poetry, ideas, and entertainment guide in America. It's been called the best magazine in the world, probably the best magazine that ever was. See if you agree. Call this number and get 52 weekly issues of the New Yorker for just $25.95. That's $65 off the cover price. Call now and you'll also receive this reproduction of the very first New Yorker, published in 1925. This collector's copy is free with your paid subscription if you act now. Call 1-800-331-2000. That's 1-800-331-2000 for 52 weekly issues of the best magazine in the world. Yes, the New Yorker.
This is a typical Sunday morning at Rizza Chevrolet in Bridgeview. It's very quiet, very peaceful, and very closed. As a matter of fact, this is the only time you'll ever see Rizza Chevrolet so quiet. Because every other day of the week, this place is jumping. Jumping with people picking out Chevys from one of the Midwest's largest inventories. Rizza moves them out faster because their prices are lower. Shop and compare and you'll know it's a fact. Rizza Chevrolet, 82nd in Harlem, open every day but Sunday.
The average American family now spends over 74% of its leisure time watching television. Over 16 hours a week is spent just watching commercials. Yes, America has become a nation of couch potatoes. You're probably being a couch potato right now. So you should be playing the couch potato game. The outrageous game of skill and observation that is actually played by watching TV commercials. The couch potato game. Just think, you could have played it with this commercial.
Next on Monitor Reports, Mozambique. Next door to South Africa, a neighbor to apartheid. The government fights guerrillas it says are supported by South Africa. That's our show for this week. I'm Meredith Lewis for the Christian Science Monitor.
For a printed copy of today's program, send $2 to Monitor Reports, 2 John Street, New York, New York, 10038.
Baby, you're the greatest.
Join the Honeymooners Anniversary Celebration.
Tuesday at 7.
That old car is worth money. Call Victory Auto Wreckers at 860-2000 for a quote. Victory will buy, no matter what condition your car is in. Victory will tow it away free, and you'll get cash on the spot. Call 860-2000 for a quote. Or save money by fixing up your car with used parts. Victory has 7 acres of used parts. Starters, transmissions, batteries, generators, alternators, water pumps, doors, bumpers, fenders, hoods, for all types of cars. Victory will install a guaranteed used engine for as little as $5.95 or a guaranteed used transmission for $200. Bring Victory a bona fide quote and they'll match it or beat it. Victory Auto Wreckers, 710 East Green in Bensonville near O'Hare. They'll pay top dollar for your junk car or sell you the used parts to fix it up and at low prices. Call Victory, 860-2000, 860-2000.
Few issues today have generated such interest as church and state, God and government, Christ and Caesar. The importance of these issues is becoming increasingly clear as the days go by. That's why I was so happy to be invited on the 4th of July to go to the capital of our great nation, Washington, D.C., and there, in front of the Lincoln Memorial, where other great issues were once resolved in the life of that great president, to present a message on America for God. And why I'm happy to be able to offer you today a marvelous new book on that subject entitled God and Caesar. I'll tell you more about this in a moment. But now we're going to the capital of our nation for a great scene as we look at the Lincoln Memorial, America for God.
Thank you, ladies and gentlemen, and I'm sure that you join me today in wishing a very happy birthday to America. This indeed is a day of great significance. As we celebrate the birth of this great land, we know that this land has been principally made great because it is the great bastion of freedom and liberty. And of all of the freedoms which we most enjoy, that which was most important and still remains so is the freedom of religion. In fact, in the Bill of Rights, in the First Amendment, before they guaranteed the right of the free press, or the right of the freedom to assemble, or the right of freedom to petition the government, or even the right of the freedom of free speech. Before any of these, and first of all, they guaranteed the freedom of religion. And that was a unique act in the history of the world. On that day, for the first time in the history of this planet, religious freedom became a reality. There had been religious toleration before, but it had never risen to the level of religious freedom. America was a religious nation. In the 1890s, the Supreme Court of the United States, in the Trinity decision, examined all of the documentary evidence concerning the foundation of this country. And they concluded their investigation by saying that this country is a religious people. This is a Christian nation. I believe that we have come to the place that we have come today and are gathered together at this occasion because of two principal causes. One must be laid at the door of the church itself, and that is we must confess, as we have done in these documents which have been read, that a great part of the responsibility rests with us. We have failed to obey the Great Commission. We have failed to bring the gospel of Jesus Christ to the people of this nation. Only last night, in a taxi cab in this city, I talked to a man who had been here for 12